Hello, chart watchers, and welcome to this Friday, September 6th, 2019 Market Watchers live show with your hosts, Erin Swenlin and Mary Ellen McGonigal. Welcome to the show. For those of you joining us for the first time today, we're glad to have you, and we hope you'll come back. And for our regulars, welcome back. All right, let's go ahead and take a quick peek at what's going on in the market right now. All right, so currently we're seeing all of the markets mostly up, but Canadian markets down slightly. Dow Jones is up a little over a 0.25% right now. NASDAQ is barely holding on to positive territory, up about 0.02%. New York Stock Exchange also up. Looks mostly like consolidation out of yesterday's pop to the upside in the morning. We've got Russell 2000 also starting to gain. Again, we want to see those small caps doing better. Treasury yields are down slightly. We're looking at 1.547%. The VIX continues lower. We're at 15.53 for the reading. UUP currently dollar down slightly, 0.15%. Gold is up 31% or 31 cents GLD and making a little bit of a rise after yesterday's deep decline in the morning. USO is starting to gain some ground after gapping down this morning. Currently, it still is down 0.43%. TLT is rising, the 20-year bonds up 82 cents to 145.58. All right, Mary Ellen, it's Friday. Woo-hoo. I just saw you yesterday on our Wealthwise Women show, but great to be co-hosting with you again.
Yes. A little shift in dynamics today, not quite as bullish, but certainly buyers are coming to the table. Storm watch a little bit behind us now, and seemingly the trade war fears as well.
Yes, apparently. I was telling Tom a while back that it really reminds me a little bit back when Greece, remember, was the big news item. And so no matter what the market did, whether it went up or whether it went down, it was because of what happened in Greece. And I don't know about you, but I couldn't believe that they had a stranglehold on the world markets like that.
I do recall that. Oh my gosh.
Yes. So, I mean, not that the trade wars aren't important or anything like that. I just, hearing about it every single day, I just have to believe that there is a little bit more to market dynamics than just the trade wars. All right. Why don't we go ahead and have you do the upcoming schedule and agenda?
Yeah, let's take a look at what's coming up. Tom Bowley is back in the house, and that's going to be on Monday. On Tuesday, Erin is going to do a workshop. You won't want to miss that. And then Dave Keller will be joining Market Watchers live on the 11th and John Murphy on the 12th. So it looks like a pretty big week.
I know.
And then today, of course, we're going to do what's hot, what's not. I'm going to cover a lot of territory there. There's a fair amount going on as far as potential shifts in sector rotation. Then, of course, we have 10 in 10. Go ahead and get your ticker symbols in if you haven't already. Erin's going to cover those 10 stocks in 10 minutes. So that's primarily our agenda. Of course, we'll have that poll at the end.
Yes, absolutely. All right, well, let's go ahead and get started on some of the technical news and headlines. Key economic reports, not much in the way of news behind those numbers, but non-farm payrolls, 130,000 versus 170,000. The unemployment rate is steady at 3.7%, and average hourly earnings went up slightly to 0.4% versus the 0.3% that was expected, and was also what we saw last month was 0.3%. As far as our key earnings reports go, we had quite a few that reported after the market closed yesterday. There really weren't any that were that interesting, I would have to say, for the market open today. So I figured I would put in all of those earnings that were reported yesterday afternoon after our show. Lululemon beat expectations. You can see DocuSign did come in lower by 3 cents. And then we did have two up here, Domo, and then at the bottom there, CrowdStrike. They were already expected to lose money. Domo came in just a little bit better at minus 90 cents versus $1. And we can see that CrowdStrike came in a little bit better with minus 18 cents versus that minus 22 cents that had been expected. You can guess which direction those stocks are currently going right now. All right, so let's go ahead and I will look at a couple. Domo was downgraded, so I'm going to look at that one. And let's go ahead and we'll look at GuideWire as well. So let me grab that screen and we will look at those right now. All right, so let's go ahead and like I said, I want to start with Domo. And as I said, they were already in the negative category. And you can see that certainly that terrible earnings, I would have figured, considering that they already were expecting lower earnings, a negative report, that we would have seen that more baked in. But no, over 34% right now, Domo is dropping. And this is something that you can really see here. Most of our stocks that we follow have come out of those December lows, and they did make these big moves to the upside. But notice that Domo, unlike a lot of the other stocks, has just been trending lower ever since the March high there. And now with this, let me go ahead. I'm going to annotate this just briefly here because I want to show you where the support lies. And that would be right down here. We have not hit that. So there is certainly room for Domo to move even lower at this point. So not surprised that it was downgraded as well. That's why I wanted to point that one out. Let's go ahead and also look at GuideWire. All right, and GuideWire, a little bit of a different picture here. What we could see, and when I looked at this yesterday, I had a little bit of a different view of it. You can see a symmetrical triangle, and granted, these can be, you can see these break either direction, but typically they're more of a continuation pattern. And given that we were in a declining trend here, I would have expected it to break down, but it did not. And of course, it's up almost 17% right now, and it has gotten above that overhead resistance area just below $110. Beautiful PMO here. And of course, the scooter, it's on that scooter mover list today as one of the big gainers. Not a surprise when you see that pop all the way up to a ranking of over 93 right now. So I thought that one was interesting to take a peek at. All right, I want to go now over to our market summary. I think that this is something you all should look at regularly as well. And I'm going to take this into the table view. And let's go ahead, and we're looking at the major markets. I'm going to, of course, set it up by % change. You can see the French and German markets are doing the best right now, with the French market, the French CAC up 1.11%. When we look at these other major indexes, of course, the value line is the highest right now. And transports, which were having a great day yesterday, are seeing a bit of a pullback right now, down about 1/3%. As far as our sector spiders go, materials and discretionary are in the lead. And we are starting to see energy perk up just a bit, which I find interesting. Bruce Fraser was on the show yesterday, and he talked about, the energy does seem to be perking up. We had a poll that asked whether you thought gold miners versus energy would do better into the end of the year. And he said energy. I said gold miners, but I have to say, looking at the chart and starting to see some of these stocks in that energy area perking up, I think that that's interesting to look at. And here you go with the energy chart XLE. You can see that nice rounded bottom coming through, and the PMO buy signal is there. If you look, it's very visible in the thumbnail. The 5-day EMA has crossed above the 20-day EMA, and it's starting to see the right kind of movement out of the OBV. It had kind of flattened here, but now you can see we have rising bottoms, and they were rising slightly here. Again, the thumbnail's very helpful. You can see those two bottoms right here. They are rising. And what was going on with the price bottoms? They were actually in decline. So I think that that was a positive divergence. I think we're seeing that resolve now to the upside as is expected. Of course, 50-day EMA is sitting out there, could become a bit of a problem. But, I like the way this energy chart is starting to look, and I'm going to start looking a little bit more in the energy sector now for some possible opportunities going into the end of the year. As far as U.S. industry indexes go, oil services, insurance, and airlines are leading. I did notice when I ran some scans yesterday that I did get a lot of the financials coming up. And this is the insurance index right here. And I did find a lot of those financials were in that area of insurance. So I look at this chart and I think, again, these are really interesting setups here. And I've been seeing these on the major indexes, and I did write about it on Wednesday. But this is a ascending triangle. These are the kind of patterns you want to see. It's a bullish pattern. We did have a failed breakout there, you can see, and it did close on near the lows yesterday, which is generally not a good sign. But as you can see, we're trying to break out once again, and we are trading at the intraday highs currently. If you're looking at overhead resistance here, of course, right there at the highs we saw back in July. But notice also this PMO buy signal coming in on that insurance index. All right, so let's go ahead and look at a few upgrades and downgrades. I am going to start with, let's go into, I want to do this in ACP, our new advanced charting platform. And let's go ahead and we'll start with Kellogg. Kellogg was upgraded today by Goldman from a neutral to a buy, and they have moved their from the $58 level, which of course would be right about here, drag it down just a hair, and they're moving that up to $72. So we have to actually drag this down a little bit just to get to that level. So $72, right about in here. Let's see. Yeah, right there. That's close. Ah, there it is. See, they do have their technical analysts on board when you see that matching up right there with the last high that we saw on Kellogg. So that's where they're expecting this one to go. I like this formation. I think that you could, let's take that out. I don't want that. I think you can certainly make a case for another one of those ascending type triangles going on here, possibly. Or let's see. Yeah, I mean, I can see if you don't take into account, and one of the things that Martin Pring calls those, when you get those really spiky intraday highs or lows, sometimes they come across, he says, as a Pinocchio move. So you can make your choice. I would look at this and I would go down here and look at this as an ascending triangle. You could even make a case for a possible flag and pennant coming up here. Notice that the PMO is turning to the upside right now on Kellogg, and it's turning up after consolidation. The PMO was able to unwind. So it is, while it is somewhat overbought here, I think it could still move higher, and so does Goldman. Next one up is OGE, and B of A Merrill has upgraded this from a neutral to a buy. They have moved their price target from $44, right about in here. Let's take that up a little. And again, there you can see it matching up right about there with that top. See, again, love it. See those technical analysts at work here. $44 was the target. They have moved it up to $46. And if I go back, let's see if that comes into play at all. We're already sitting near those, what looks like pretty much all-time highs here for OGE Energy. And again, I'm seeing some perking up in this space. So seeing the PMO buy signal come in here on this, on OGE, I think looks pretty good for this upgrade. Let's move to a downgrade. Bank of America was downgraded by Keith Bruyette from an outperform to a market perform. And their target got moved from $36 down to $29. So bring this back just a little bit. But their high previously was about $36. So I'm guessing that matches up a bit higher than that. So at this point, this is pretty clear support down here. And honestly, you could have made a case for a bit of a double top here. And the expectation would have been a breakdown below this confirmation line. But what happened? Instead, we saw a bounce off of that support. and we've got a PMO buy signal. So interesting to see that we have this downgrade on Bank of America, but I think financials are starting to perk up as well. All right, we will be right back with what's hot, what's not right after this.
And welcome back. We're going to jump right into what's hot and what's not. And there certainly is quite a bit on the what's hot side. We're seeing a lot of sectors, a lot of areas of the market perking up this week. Two of the better performers as far as what's hot are very directly tariff and trade war related. Already were rallying, but got quite a boost on yesterday's news that talks are going to be resumed in October. So let's jump right in. We're looking here at the semiconductor ETF, the SOX, SOXX. And what I wanted to point out to you here is this bumpiness that pretty much a lot of the market experienced here in August. But take a look at the action more recently. Semiconductors were beginning to firm up. Yesterday, we saw a big gap up more than 3% on those trade talk news. And then we're seeing a little bit more of a continued uptick. So let's take a look at some of the stronger names and those that certainly are better performers this week, as well as overall. You do want to be in those stronger names if you are going to play this potential move into semiconductor stocks. So here's Micron. MU is the ticker symbol. The stock reached a peak in price here at the end of July. Very strong. This is a big gap up on earnings. Take a look at that volume. The stock entered into a very confirmed uptrend, got caught in the August downdraft, and we can see the stock this week broke out of this very nice 1 month base, did so on big volume. So we have this big gap up, RSI trending upward and in positive territory. Moving average convergence divergence down here never really got negative. You could have stayed with this stock throughout the month of August. We can see more recently we've had that black line up through the red, bullish move there in conjunction with the gap up and RSI trending upwards. So very constructive chart. Analysts are upgrading this particular stock. They're citing NAND and DRAM. Chip pricing is very favorable. So let's take a look at Intel. Intel is a semiconductor stock that really did get hit a lot in the way of competition from AMD. Gap down here on earnings. Generally not one of your better performers. But analysts think that Intel is turning things around, and we can see that the stock's price has broken up above each of these key simple moving averages. This green is your 10, red 50, blue 200-day simple moving average. And when you get that price break up above those more flat trending simple moving averages, that can then turn the moving averages upward to the point where we may have this bullish cross, and then the stock has more room to advance. The overhead supply will take us up here to 53. A breakout above that would be another continuation of this bullish move. RSI and MACD are both positive on Intel. Let's take a look at NVIDIA. NVDA, another bellwether, certainly semiconductor stock. See if I can get the ticker symbol in here. And what we're looking at here is a company that came out with earnings here. This is mid-August. The stock had been in a downtrend, certainly with a number of other semis on the trade war fears. Take a look at this gap up on earnings, big volume. Stock trended sideways, but another gap up yesterday, again on volume. So we're right here sitting at this 178, and the stock is poised to break out of this 5-week base, which would be very constructive. It's a bit extended, but we could, if we do get a breakout on volume, that would be another bullish signal here. RSI and MACD are positive. One other name that we can take a look at here in the semis, LRCX Lam Research. Analysts are upgrading the stock, and we can see this is another one that has broken out of this 1 month base, big volume, really setting itself up to be a leadership name among software stocks. RSI, MACD are both positive. And analysts came out today. They put a $250 price target on the stock. It's trading at about 230 now. So that would certainly be a nice 10+% advance. Let's go ahead and move over to another area that has been directly impacted by the trade war fears, but more recently, we're seeing some really solid numbers coming out of some of these retailers. Today's big winner, of course, is Lululemon, LULU. Take a look at this gap up, big volume. And I will say one of the signals going into earnings for Lululemon is the number of analysts that were raising guidance going into their report. The company has a history of coming in ahead of estimates. They did not disappoint today, big numbers. This company, now we can see the stock broke out of this 1-month base, big pickup here on the volume. And the company really only has 6% as far as exposure to China, as far as sourcing products from there. So they are favored to do well, even if we see any kind of trade war fears come back into the market. Let's take a look at Foot Locker. This has been a really down and out stock. We can see this gap down here on earnings. Stock attempts to reverse this downtrend. No such luck. Another gap down, more weak earnings. A lot of these footwear companies, 80% of their sourcing is from China. They are going to be directly impacted, but Foot Locker had other issues. This week, there are analysts that are considering the stock a bit overdone to the downside. So the stock is having about an 11% rally, but certainly the stock is really down and out. We can see these simple moving averages in a downtrend. The MACD down below here has had that positive crossover, still below that net neutral, however. The stock just has way too much work to do. There certainly are better names. Let's go ahead and take a look at some of those better names within retail. This is Dollar Tree, and a lot of these discounters are really coming in quite strongly. This particular stock, this is all about earnings and guiding lower. Dollar Tree, they are attempting to reverse that downtrend. So now we've broken up above these simple moving averages. This green line is your 10-day. It has broken up above the blue 200-day simple moving average. That's a golden cross. Quite simply, it's telling you that the downside momentum has shifted. Your next potential cross is the green up through the red, and we can see a significant uptick here in the RSI. MACD is positive as well. So again, ideally, once we get above this 112, this is going to be overhead until we break out. This could be a very interesting stock. Dollar General is also in the same space, and this is earnings related. Take a look at this gap up. This really is quite classic when you see stocks that gap up on earnings, and then within that, they subsequently break out of a base. Big volume, and of course, we can see the continued uptick here of the stock as buyers continue to support it. And then one other stock I did want to point out to you, also a discount retailer that looks quite attractive. They did just come out with earnings fairly recently. This is Ross Stores. And take a look at this. The stock had hit a new high back here in July in anticipation of strong numbers. The numbers were not great, but the stock did find support at this upward trending 50-day simple moving average, a little bit of a dip below, but more recently we have broken out of about a 6-week base on big volume. RSI, MACD, both positive. So this really is quite an attractive chart if you are looking for potential candidates among. And then one last name that we really need to take a look at this week, and that's Amazon. Really bellwether, big cap name among these retailers. And the giant has awakened. The stock is up about 3.3% on the week, which really is a big move for such a large cap stock. What I did want to point out to you is that during this August chaotic back and fill period, Amazon continued to find support at this flat 200-day simple moving average. That's your blue line. So for those of you that stayed with the stock during this period, you are being somewhat rewarded. The stock, again, is up about 3% for the week. We do want to watch how it behaves up here at 1875. That's your 50 50-day simple moving average. This very well may be near-term resistance. However, let's go back to this June downtrend reversal. Take a look at how once the stock broke above that 50-day, it was able to advance up here close to new highs. So we're going to keep an eye on this one, but good to see Amazon joining the fray, if you will. Erin earlier talked about some of these financial stocks, in particular banks, but I am going to take a look first at some of these payment processing companies. And this first one we're looking at is Global Payments. We can see the stock was a really big leader going into this August downdraft. And when you see these stocks in these big confirmed uptrends, very often there are sound reasons. We can see a gap up here on earnings, another pickup here on earnings, and the general uptrend here, so that when these stocks pull back, oftentimes it's an opportunity to gain shares in a very fundamentally sound company. And this week we are seeing the stock did gap up here on big volume and broke out. And this is what we talked about earlier. This is a very bullish formation breaking out of the space on volume, and the RSI and your MACD are quite positive. Let's take a look at another payment processor. This is TSS, Total System Services. And this is another stock. This is a gap up here on strong earnings. Company continued to retain its uptrend here, got caught in the August drop, but more recently breaking out of a nice 1 month base. Again, RSI and MACD. So I would argue these two are your bigger, certainly your leadership names among these payment processors, which is a very vibrant area of the market. But another name we can look at is Visa and MasterCard. They both look very similar. These, again, are big winners. Payment processing stocks are really putting up some good numbers. And we can see this is another name that broke out of this volume, out of this base on volume. Let's go ahead and move on, because there are other areas that are really starting to come into favor, and I feel you need to know about them. Let's take a look originally at, pardon me, I'm going to see if I can find the ticker symbol for the Dow Jones the transportation. We're going to take a look at some of these transport stocks. $TRAN is the ticker for those of you that want to follow. But transportation stocks are starting to pick up here. This is the action that we're seeing. It did begin to pick up last week, a continuation this week, a break above these simple moving averages, and a move into these transports is really interesting. The first area we are going to take a look at are some of these trucking stocks. And oftentimes when you see bullish moves in these transport stocks, it's confirming that there is potential broadening out and firming up among the economy, because there's a need to have these purchased goods moved and transported, if you will. So JBHT among these truckers is a really big winning name. And we can see that the stock is poised to break out here to a new near-term high. This is taking us back to this February. This downtrend reversal attempt was met with resistance at this downward trending 200-day simple moving average. But again, more recently, we've now broken back above each of these simple moving averages. So the stock certainly has more room. It is freer to move higher. So this particular recent move has everything to do with analyst upgrades, and they're seeing a lot of truckload improvement as far as the company's dynamics and their fundamental possibilities going forward. Analysts are starting to raise their estimates for some of these trucking stocks. Let's take a look at a smaller name, SAIA, among these truckers. And this is another one that is having this big gap up, another one that analysts are upgrading. And it has a lot to do with management of these trucking companies are revising their outlook, as well as they are seeing a pickup in demand for their services. YRCW. Now, this particular stock, of course, we can see is really coming off a severe downtrend. This is a multi-month downtrend. The stock could be potentially reversing that downtrend. And I'm going to tell you what we need to see in order to confirm that this downtrend has reversed. Your first key, this is a $2 stock, but really we can utilize it as a way to be on the prowl for those dynamics. We want to see this price break up above this $3 mark, this downward trending 50-day simple moving average, in line with a MACD that gets up above this net neutral zero. And then we also want to see the RSI break above that 50 and trend upward. So I'm going to take you back to the beginning of this year when we did, in fact, see those dynamics take place simultaneously, and take a look at that nice updraft subsequent to that. So that's truckers. We can take a look at some of these airline stocks. Alaska Airline, they're expanding their services along the West Coast. Analysts like that. They're upgrading the stock. So it's a bit extended given the move it's had. It's up about 7% for the week. But if we do eventually get a breakout above this 65, that would be a nice 4-week breakout. You're going to want to pay attention to volume. We already have that RSI in positive territory. MACD just poised to trend up above that net neutral. So this could be a very interesting stock among these airlines. UAL, United Airlines, company came out. They are reaffirming their bullish guidance, and they're seeing an improvement in traffic. But I would argue that this is not only a very sloppy looking pattern as far as the stock eventually here going pretty much up and down quite a bit for the year. And now we are in the throes of trying to reverse this near-term downtrend. So I would argue this would not be a stock that would certainly be of interest to me. Instead, we can take a quick look, and actually Delta is not looking particularly bullish either, but certainly not as volatile. So we can see that this is a downdraft in line with the broader markets for August. If we see Delta Airlines break above this 50-day simple moving average in line with a bigger uptick here on the RSI, and then we did have the MACD black line up through the red. If that gets up above that neutral, we really could be onto something here with Delta Airlines. Again, I'm going to take you back to this May downtrend reversal that occurred in June with Delta to remind you of those simultaneous dynamics that you want to see. RSI up here above net neutral, price above the moving averages, and then your MACD in positive territory. And we did have a very nice upward move beyond that. And other areas that are beginning, I'm trying to show you areas that are just starting to gain potential traction. And I'm going to show us, let's go ahead and start by taking a look at Treasury bond yields. So $TNX is going to get you the 10-year yield, the Treasury. And take a look. We can see that more recently, yields have really gotten down to about 1.47 at its low. But over the last 2 days, we're seeing a bit of an uptick here. Yields are up a little bit today. We're back up to about 1.6%. So this kind of move is really going to help some of these bank stocks. They derive a lot of their profit margins coming from higher yields. And of course, this spread among those treasury yields. So KRE is the regional banking stock ETF, but we can see there is still work to do. This is action over the last couple of days, a lot of choppiness during this August period, but we would like to see financials and in particular bank stocks begin to participate in this broadening out that we're seeing in the markets that would be bullish. JP Morgan, certainly one of the better names among these larger bank stocks. This is quite bullish. Again, broken up above this 50-day simple moving average on big volume. RSI is positive, MACD just poised to come up above that net neutral zero. So we would like to see that. JP Morgan, in addition to their banking area, they do have a very big credit division that is really boding well for the stock. We talked about the other credit-related, Visa, Master doing quite well, MasterCard. Let's take a look at a couple of other bank stocks before leaving this space. This is EWBC, really a very lengthy at least 1 year downtrend in the stock, trying to reverse that, but it is going to have work to do. When you see these longer term simple moving averages trending downward, that is really quite a heavy pattern, and it is rather bearish. We can see these other reversal attempts. They will be met with resistance at the downward trending simple moving average. Take a look at this reversal attempt here at the end of July, hit with resistance. Another big name we can take a quick look at is Citi. And Citigroup is the ticker. We're not quite up above that 50-day simple moving average yet. So the stock does have more work to do. It is not as bullish as JP Morgan that we were looking at a little bit earlier. And I want to see what other, because I do want to cover some of the areas that are not performing well this week, just to keep you in line or in tune with occurrences. Certainly outside of what's hot, there's been a lot of upticks and broadening out in areas that are improving. But let's go over to healthcare and take a look. Some of these healthcare providers are just continuing to unfortunately come under distribution. This is Humana, HUM, and we can see the stock had a really nice downtrend reversal. This August move really ignoring a lot of the downdraft going on in the broader markets, but more recently has fallen back out of favor. These healthcare providers do tend to get caught up in the cross currents of certainly political, because there is the concept of healthcare for all that will negatively impact these stocks. But let's take a look at it technically. This stock had this, I believe I covered it last week, because of this breakdown below these longer term simple moving averages. So what happens during that, after a stock breaks below key, what was once support, this really is quite bearish. But also when you see a continued downtrend, eventually you are going to see this shorter term 10-day simple moving average cross below that 50-day. And the terminology for that is a death cross. And again, quite simply, it is telling you that this near term uptrend that was in place, the momentum has shifted. And now we can see the 10-day poised to cross below that longer term blue 200-day, another potential death cross. And then we can see that the RSI and the MACD are both negative. So Humana not looking too healthy here. ANTM is Anthem. Blue Cross, another name in this space, really just fell out of bed here, taking us back to the beginning of August. And the stock is continuing to deteriorate. This is that death cross I talked about, 10-day down through the 50, and eventually the stock breaks below that 200-day. So very, very heavy downdraft as far as what to be on the prowl. Once you see these stocks break potential support, you can see there's a lot of downside potential ahead. Let's take a look at some of these medical system stocks, another area of healthcare that there are pockets that are getting hit this week. This is Haemonix, HAE, and they are a smaller cap medical system stock, but we can see that the stock has been in a really nice uptrend here. This has everything to do with earnings, analyst upgrades, but more recently, the stock is pulling back. And oftentimes you will see this. I will say HAE is seeing a couple of analyst downgrades, but in fact, the stock has been a super big winner off of this August lows. So at some point in time, you will expect to see a pullback. This could be interesting because this pullback to this upward trending 50-day simple moving average could in fact be a buy point if it holds support here at this 50-day. You don't want this 10-day to cross down through the 50, but at some point you will see an eventual leveling off of this big winning stocks price with an eye toward it turning back up. So a break back up above that 10-day would be bullish for HAE, but certainly looking a little heavy at this juncture. Another medical systems stock. This is a bit more volatile, but QDEL had this big pop up here last week, and it's giving a lot of that back. But instead, I think I'm going to move on to some of these consumer staple stocks that have gotten hit. A lot of the tobacco names, of course. This is TPB, Turning Point Brands. And we can see this drop came in actually ahead of the report of their earnings. The company did come out with actually good results and they guided higher for the year. But a lot of this is due to the there is a lot going on as far as the vaping and what's the negative impact of that. So we can see that this particular stock, Turning Point, is very much in a downtrend. It was very close to hitting a new high in price back here at the end of July. But again, we talked about those breaks. When it breaks below these for instance, this red 50-day simple moving average, you want to pay attention to the volume, a bit of a pickup here. Stock continues downward, and now it is finding any kind of reversal attempts. It's finding resistance at this downward trending 10-day simple moving average. Let's take a look at Tyson TSN. This is a stock that was a big winner. They're doing a lot in the alternative meat, high protein meat space. TSN is the ticker. It is getting hit this week, and it has everything to do with the company guiding lower for fourth quarter. They did have a fire at one of their facilities. They had higher costs with other safety initiatives, but the stock is finding support at this upward trending 50-day simple moving average. So we're going to want to pay attention if you own this big winning stock. You want to go back historically and see it has been able to find support historically at this 50-day, just dips a bit below it before advancing higher. So that's a key area for this stock. We're going to want to see, can it continue to retain and find potential support? But of course, you don't like it when management guides lower. That is not an ideal scenario. Let's take a look at Coke. And this particular stock, the company came out with really strong numbers. This downdraft, I was pressed to find any news. Only news, or certainly potential news, is that they are headquartered in Charleston, South Carolina, an area that got really hit. But honestly, that's just conjecture, because the stock again here broke below this 50-day simple moving average, which historically, we can go back to this May period, can be a real negative sign for the stock. And then another consumer staple stock, this is SAM. SAM is the ticker symbol. It's Boston Beer. Big winning stock, and this has everything to do with their carbonated alcoholic beverage. They have a line that is called Truly, and again, it's seltzer-based alcoholic drinks. And the company Truly is actually accounts for 30% of Boston Beer's revenues. So we can see that they did come out with good numbers, a nice, big, strong uptrend. What happened this week is the competition is starting to heat up, and White Claw is a private company that is has seen a 70% surge in their sales. So analysts are downgrading, but again, it is finding support at this upward trending 50-day. And we can go back again to here to this May downdraft. A pullback at that juncture was in fact an ideal buying opportunity. That break back up above that 10. That's what you're going to be on the lookout for, above that 10-day simple moving average. One last area on the downside that we can take a look at are some of these internet related stocks. And this is another case where it is a big winning stock, but competition is coming in. Match.com, an online dating app. Tinder is their big app, and the stock, this is a gap up on earnings, and it has been a big winner. These subscription-based services that are able to expand their subscriber base, it bodes well. But Facebook is rolling out a dating app that they're incorporating with Instagram. So analysts feel that that is going to take a bite out of Match.com's subscribership. We're seeing a little bit of a pullback, but not as bad as you would think. Let's take a look at Zillow. This is a stock, the home, they provide real estate information. Big gap down here on earnings. The stock DOA, and this is what I talked about earlier. When you see these breaks down below key simple moving averages, pick up really your bigger volume days are on those down days, not what you want to see. Stock is very much in a confirmed downtrend. We can take a look at Travelzoo, another internet related, in this case, of course, travel related. And this is another stock in a very confirmed downtrend. Interestingly, it is up 8.5% today. So we'll see if potentially analysts and investors might think that the stock is a bit overdone to the downside, and it could potentially be reversing, but we're going to want to see it break up above that 50 and 200 day before this downtrend could be considered potentially reversed. Very quickly, gold stocks, and I'm just going to show you one ticker, and then we will move on to the 10 and 10. But this is GOLD, and this is breaking down. A number of gold stocks did get hit, certainly because the flight to safety aspect, not as appealing when analysts and investors think that the trade war fears are over. But a lot of gold stocks had big moves last month, up 20+% for GOLD. It's certainly due a pullback. And that is it for what's hot and what's not.
Wow. I'm always so impressed at how you can go through all of those so thoroughly in such a short amount of time.
A lot going on. I hope people really picked up on some of the potential rotation that we're seeing out there in these markets. So
Absolutely. And yes, as you're pointing out, I mean, the things that are what's not hot, when you're starting to see healthcare and consumer staples in there, that should give you, information on a possible change in those market conditions back to a more aggressive approach.
Mm-hmm.
All right, well, let's go ahead. And I do have an RRG, and then I'll let you take a break and just give me the symbols. But here is the list. We had a lot of discretionary and technology. That's pretty typical. Comm services came in there. And then only 3 other sectors that were requested: financial, industrial, and energy. So
very good.
I happen to know the first symbol is
Tesla.
All right, let's go ahead and do that. Excuse me. All right. Okay, Tesla. It's had an interesting time of it, hasn't it? And again, notice the difference in this stock versus so many in the markets in general, that they came off of December lows. Instead, of course, we had the opposite happen with Tesla, and it just continued lower into the new year. And really not until June has it really, excuse me, not until June has it really turned up. I thought that it was kind of interesting, though, to see we were in a declining trend. Well, actually, that looks more of like a declining, descending wedge. Those are bullish patterns. I do have a PMO buy signal, and we are seeing a breakout from that wedge, but not really decisive. Decisive means about 3%, and it does seem to just be, moving sideways, not doing very much around those 20 and 50-day EMAs. Now, given that buy signal, I think we could manage to get a little bit out of Tesla. I think there's probably better areas to be. But a rise up to that 200-day EMA or that July top certainly is possible, I would say, given the setup here from the PMO. We're not seeing that much out of the OBV. I suppose you could say it was somewhat of a positive divergence in that OBV bottoms were moving mostly sideways while price bottoms were moving downward. But overall, I don't see that much there. So that would be
very good. Yeah, the next one is a solar company, ENPH.
Yes, in that energy space. I know that's been something, like I said, I know that we've seen a little bit of a move to the right side. Renewable energy, excuse me, I got rid of Sunrun a while back, started to really see the problems going on with that particular space. And honestly, of them, I didn't, Sunrun wasn't really the best choice anyway. Obviously, got a rounded top here that executed. We're trying now to fill in that gap, which I would suspect we will see filled here. That's where I'm looking for it to go now that it broke down below that gap support that could have been support. So now it looks like we're going to close that gap. PMO is certainly telling us to expect that. Notice OBV is also going in line with what's happening in price. I don't like it. I hope you got out near the top. But at this point, there's that possibility you might find support after closing that gap. But typically, once you go down to close those gaps, you continue lower. So I definitely would not be in that renewable energy space right now.
Okay, next one is a natural gas ETF. The ticker is UNG.
All right. I used to trade this one all the time, and I got burned, I would say, every single time. So I finally let it go. But it's been it looks like it is perking up now. There's certainly some information on here that is bullish. You've got a 20-50-day EMA positive crossover. Of course, we got this PMO buy signal back in mid-August. Of course, it didn't really pan out until later in August, and now we're making a really nice run. At this point, I'd be a little bit concerned about overhead resistance at this 200-day EMA as a possibility. Let's just take our auto support resistance and make a few notes here. So this was the top that we saw back in March, and that's really where things started to really deteriorate for natural gas. I think if we could get, this, everything looks set up pretty well. We have not seen that 20 above the 50 since all the way back here in 2018, and we're finally starting to see that, and it's coming on a PMO that is now in positive territory. Notice OBV rising. Got the wrong tool there. Notice the OBV is rising as well. I think that looks pretty great. And of course, your scooter is just, it's been flatlined this whole time, and now it's finally starting to rise. So I think that's a positive. So it is up to, and a third percent. I think there's still more upside potential here. I'd just be really worried about that $22 level. And, hopefully we'll see that manage to be broken to the upside.
All right, the next one is actually part of our poll.
Oh, yes. Disney, I do recall that. All righty. Okay, so let's go ahead and look. And I did the weekly chart for it. I'll actually, why don't I just go and do that so you can see my weekly chart for Disney. And that is in the poll question. Here we go. Now I can just do this quickly. I went ahead and did a weekly chart because we were talking about it going into the end of the year and what I thought. Here's my problem with it in that intermediate term. When you look at the weekly chart, is you have this broadening pattern. It's like a bugle, and this, of course, means your volatility is increasing as you move forward. I don't like to see that, and you have the PMO sell signal here. So when I was looking at which would do best into the end of the year, I didn't pick this one just because of the uncertainty I have about it. If you want to go and look at a daily chart, right over here, I mean, I think the daily chart's looking pretty good if you're into a short-term trade here, because we're getting that rounded bottom, and you do have the PMO buy signal. But as an intermediate-term trade, I would pass. All righty. I think we lost Mary Ellen's audio, so I'm gonna.
Okay, I think
there you are.
Sorry about that. The next one is Weibo, WB, this ticker symbol.
I love that name. That's just too funny. Weibo. Bulls wobble, but they don't fall down. Okay, let's go ahead and check this one out. I'm looking at that PMO buy signal. That's catching my eye right away, and the fact that it's now in positive territory. Let's look at some of that overhead resistance that it looks like we did break through, indeed. And we have a gap to fill here. The last one we looked at, you had the gap as it was coming down into it, and it was closing it. And like I said, generally you get those gaps to fill, and you see it continue on. So I would be looking at this one to continue rising. In the comm services area here, you've got that 20 just getting ready to cross above that 50, looking good. So that's what I think of Weibo.
All righty. Next one is Tapestry, TPR. They just had a CEO adjustment that maybe given the stock a little bit of a pop.
Oh, okay.
Yeah, this is Coach and Stuart Weitzman and a couple of other, Kate Spade.
Oh, nice. I wish I could afford all of those. Well, it's a matter of choice, I guess.
Yeah.
So here's another example. Isn't that interesting, Mary Ellen? We've got these gaps down or up. This is a gap down, and we're in the process of filling it. And a PMO buy signal has come in. Typically, like I said, once you close the gap, you're going to see a continuation in that particular direction. And prices already beat the 20-day EMA, 5-day EMA. I would look for more upside here, and the next area of overhead resistance. because I suspect it'll easily get through the $24 range, would be right around $27. So short-term trade, just pay attention to those levels and determine at that point if you want to take in some of those gains and, book them. Book them, Dano, so that you make sure that you make sure that you catch those and don't let those winnings, so to speak, go away. I like to sell half my positions a lot of times once I get to that point where I meet my target price to the upside.
Great. The next one is a Chinese software enterprise stock, BZUN.
BZUN. All right. Wow, pretty volatile. My first, at first glance, I have to say double bottom all the way. It's coming in off of a decline, which again is what you want to see. These reversal patterns, these aren't continuation patterns. These are reversal patterns. So you want to see a trend being reversed off of that particular reversal pattern. So let's go ahead and get that trend line here. I don't need the arrows anymore. So there are the bottoms. This is the confirmation line right here, right where that middle of the W is. So at this point, I'm going to say that you're going to get this move to the upside. And the actual, well, let's see, if you want to look at what the, there we go. If you want to look at where the expected minimum upside target is, you just measure the height of this pattern. I don't need to tell you that that's some great upside potential, especially with that PMO buy signal. And I think I picked the wrong symbol, didn't I?
Oh,
I think I moved ahead.
No, BZUN is absolutely correct. Yeah.
Okay.
And the next one is a smaller bank stock, PACW.
Okay.
Yeah.
Okay, there we go. Alrighty. So right now, this is perfect for your parabola tool, right? This is a rounded bottom. And I like to see that, obviously. You want to see the roundedness here at this area of support. And right now, it looks like we are trying to make a little bit of a move above what I would have called the resistance level right here in the short term, right around these tops. You can see that. And so we're getting the breakout. It has fallen a little bit below. The next area of overhead resistance, in the short term would probably be right about here at that 35.50 level. But when I look at a nice momentum PMO buy signal like this, you can come down here and you can see that OBV is moving up. Those bottoms are moving up at the same time that you're getting them moving up here. So it looks pretty good to me. I would be looking for that breakout. Just watch that 35.50 area. That's going to be the next challenge for PACW.
Okay, then we have NVDA. I know I covered it earlier. What's hot?
Oh, gosh, we're about out of time. I think we're just going to have to.
Okay.
I'll just talk about it. I'm not going to.
LHX is the last one.
The other one. Okay, so we are seeing almost a breakout here on NVIDIA. Just not getting a lot of action here. And this is a semiconductor, and that space has been pretty good. And it is perking up, but I don't see NVIDIA being the best choice in that area. And then you said LHX was the last one. I'll talk about it quickly. And there we go. It is breaking out from an ascending triangle. Looks good. I would expect more upside. All right. Yeah, we just totally blew through the poll and everything.
All righty.
You got to corral me sometimes. You know how I am. I'll talk charts forever and ever.
Well, we did have some nice choices in there.
Yes, I thought so too. So I did want to talk about them. I know everybody requests them and expects to see them. But anyway, great Friday. I really appreciated you joining, Mary Ellen. I suppose we could look at that poll. No, we really can't.
Okay, alrighty. Well, I like Home Depot near term, McDonald's longer term. How about that?
I went with Home Depot. And I think the majority of people did. I think it's a really good place.
Super.
Okay, there you go. What's happening with the market, upcoming schedule. Oh, bye, everybody. Remember to complete that survey. Have a great weekend. Do join us back on Monday when Tom returns. Have a great time. Happy trading.